Hi everyone, welcome to today's morning report on Thursday the 10th of December with me, Rich Perry, market analyst at Hantec Markets. European trading sessions a bit weak at the open, and that's come on the back of this big slide actually we saw on Wall Street last night, and that came basically Wall Street was tracking the oil price yesterday, and oil price initially jumped on the oil inventories report, however subsequently got sold into quite enormously, and oil price sort of closed again back lower. That's the oil price. Hold on one sec. That's dollar. Oil price is here. Sharp rally intraday, but then closed back lower again below that key 37.75 level. Little bit of a rebound today, but nothing too significant yet. But certainly that weakness yesterday sort of pulled Wall Street lower. Subsequently, Asian markets fell into the close, and also European markets have opened weaker again today. So that was one aspect of the key moves on the market. The other was this massive sell-off that we saw on the dollar yesterday. Looks like no real economic reason behind it necessarily. For example, the yields on treasuries didn't. I mean, yes, it was obviously lower yesterday, but no major breakdown. And also, the two-year yield was basically flat as continues this sort of consolidation really. So no massive significance on those markets. It just looks like there's perhaps a bit of positioning ahead of this Fed meeting that we've got next week. Perhaps the markets are a little bit wary about being caught the wrong side again, as they were following on from the ECB. So perhaps that's what the reason behind a bit of dollar weakness. But certainly it didn't really come on any real fundamental news. So that's what we saw yesterday. But certainly the markets are still reacting to that. Bit of an unwind today, about 50 pips back higher on this dollar today, on the euro dollar. And that sort of dragged the dollar index back higher. But it'd be interesting to see if this move continues, because already we're seeing sterling, which is sort of was weaker, now reclaiming some of those losses. So it's interesting how the market really reacts today to this, because obviously after such a strong move, if you want to hold on to that move or sort of maintain the outlook from that move, then you would like to see sort of a bit of at least a steady move or holding pattern rather than a retracement. So at the moment you're getting a slight dollar retracement. So these markets are still a bit choppy, shall we say. Now, we've just had the SNB coming out with rates decision, no move there on rates. Also, we had a rate cut from the RBNZ overnight. Interesting that with the dollar weakness that we've seen, the RBNZ rate cut actually meant that the Kiwi dollar is actually a little bit stronger today. So that's interesting in itself. A little bit of commodity price support, arguably helping that move as well. But the chart, sorry, the in front of what we've got today, which is the Bank of England meeting at 12 o'clock. No change expected there, and no change to the voting makeup either. And then after that, you've got the weekly jobless claims, which are expected to come in line with last week's at 269. So my chart of the day was the DAX, and we had a big breakdown on the DAX yesterday. We had a close below the key support around 10,600. You saw a close below that level, 10,592. That sort of completed the breakdown, or certainly the breakdown of this positive pattern. You could even argue it's a head and shoulders top with a very quick right hand shoulder. If that were to be the case, you'd give a minimum target. You'd say, well, 10.6 up towards 11.050 is that 450 pips as a minimum. So that takes you back down towards sort of almost the 10,200 mark. So there is prospect of further weakness. You've already seen further weakness, and in these momentum indicators, look at that, those stochastics sort of almost accelerating lower once again. The RSI confirms the breakdown, the MACD lines falling away as well. So little rallies, I think, would be seen as a chance to sell. You've seen today in this chart, you've got the little mini rebound back towards that neckline resistance around that 10,600 mark already, so maybe even that is your chance to sell. Here we go on the hourly chart, where you can see the little mini sort of recovery in the early part of this session. Is that a chance to sell? Well, the momentum indicators remain very weak on the near-term chart. You've got resistance coming in further at around 10,700 really. 10,697 was yesterday's sort of rebound high. So that is sort of meaning that you've got resistance between 10.6 and 10.7 pretty much on the DAX now. Would need to break through that to gain any sort of real recovery momentum. Even then, yesterday's high at 10.747 is further resistance. So there is quite a significant amount of overhead resistance that would suggest that sort of little rallies are going to be a chance to sell now. The DAX is under pressure because we've been moving between these Fibonacci levels. I've still got them on the chart. They still act as a very interesting sort of consolidation point on this chart. And the next one to the downside is 10.372, 10.373, which is a 50% fib level. And that is probably your next real target to the downside. So selling into strength for that initial target. So I wish you good luck in your trading on the DAX, and I'll speak to you later. Thank you.